Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun of the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by. While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. I don't know about this one, Josh. I know there's two of them on there. Did you go rated G or did you go maybe a little mature audiences? Yeah, we got the mature. Okay, do we start off with, might as well start off with National Scotch Day. Okay, I used to drink Scotch. My dad liked Scotch. Johnny Walker Black. I don't even know if that's still out there. I'm sure it's probably been out for 100 years. So my guess is it's still out there. Johnny Walker. I'm a vodka guy. My son likes Scotch, so I guess I don't even know what I wouldn't even know what kinds are the good ones, what are not the good ones. I guess if you're I guess after you have two or three, they all taste the same, right? I mean, it doesn't really matter. Okay, so let's move right along and see what else is going on. Oh, I've beaten anorexia, and I see this one. It's one of my favorites. National Creme Brulee Day. Yeah, I like creme brulee. Are you a creme brulee person, Josh? Yeah, Josh is out there on that one too. You can't go wrong with creme brulee. Good stuff on the creme brulee. What else? Let's see what else is going on in the world. I have a feeling that my mic isn't working properly today, but it's okay. Okay, Josh said he can hear me, so we're doing good today. Let's see what the markets are doing today. The Dow Jones. Holy cow, what happened? The Dow Jones Industrial Average is now up 113 points. It was up a lot more earlier. The NASDAQ is down 81. S&P 500 is down 8.99. So I guess, okay, I don't know if did you hear that one, Josh? Is it there? No, the soundboard isn't there. Okay, now I'm figuring out what's going on here. We've got oil down $7.23 a barrel. We like to see oil down like that. That's a good deal, watching oil being way down. That's nice. Why is that happening? We know why it's happening. It all has to do with what's going on in the Middle East. That's the biggie all the time right now. So last week we saw all the garbage numbers going on. We saw the difference in what was happening overseas. So last week, a horrible week. If we look at the bond market, we look at the 10-year treasury, all because of the fighting in the Middle East. We see a little bit of a slowdown there, or a pause, I guess they call it. And, now we see oil prices down $7 a barrel. Yahoo! Okay, Yahoo! So Yahoo! Stop that. Okay, I guess my soundboard went back on again. Okay, well, we'll see what happens. So oil's down $7 a barrel. Do we want to look and see what that means for gas prices? Well, right here in the national average, $4.11 a gallon. $4.11 a gallon is the national average of a gallon of gasoline. But we're in California, so you have to add $1.50 because we've got Gavin pricing. So it's $5.65 a gallon. $5.65 here in California. I think that's about what I paid over the weekend. Also, is $5.65 at Costco. And I go to Costco is basically it's convenient, and now I think it's quality gas. Now I don't know anything about handiwork or any of that kind of stuff, but I can tell you this: I know that once upon a time, not real recent, I put some Arco gas in one of my cars, and it was cheap at the time. I guess Arco's still pretty cheap. And I record, how do I know what I'm doing? Basically I reset my mileage on my car at every tank of gas. So when I look at it and I say, okay, I'm getting whatever it is, 18 miles a gallon. I think the last time I did was 17.9 miles a gallon. I put Arco gas in and I get about 15 or 14 and a half miles a gallon. Now they can tell me all they want that it's the same gas or any of these things. But if I could consistently see 10% or 15% less mileage, is it worth saving the money? And I have to assume that it also means it's probably not as good for the engine. I don't know. I'm not saying one way or another because I am not the expert there. I'm just saying that if it looks like a turd, it might be a turd. I don't know. It might smell. I guess that's not a good analogy, is it? Okay, let's move along and see what else is going on in the world. One of the things I'm seeing right now, and we've been talking about this quite a bit lately, is our debt done date tool. And we're going to talk today about strategies for dealing with tight money. And right now we know that people, I hear folks all the time talking about, how they have to pay for their gas. You just can't get around gas. So what else? Something else has to give. And we see credit card bills going up. We see unsecured debt going up. Well, today we're going to talk about one of the things I've shared with you a lot. Now, as a certified liability advisor, I'm always talking about safety, liquidity, and return. Well, one of the things that we know about safety, liquidity, and return is if you don't have liquidity, you got a problem. And I also know that over the last 4 or 5 years, we've seen a lot of home equity. Now, home equity is not liquid unless you take action. So today we're going to talk about liquidity. And if you want to go and get a head start, rsrlinks.com/home equity. rsrlinks.com/home equity. And we're going to show you in there 4 different ways of getting access to your home equity really, really quick. And one of them doesn't even have a payment associated with it. But we're going to talk about that in depth today. And then you'll be able to see sometime later today or tomorrow, we'll have the video for it to show you exactly what we're talking about. But you can go and start looking at both options right now. You can go and look at the debt done date tool, rsrlinks.com/DDD. That way you can look at 82 different strategies for knowing exactly when you're going to be done with your debts. Now, you get that for free. We give you everything for free here in Ron Siegel Radio. Now, if you want to go through the coaching process, there is a small monthly fee. But just to get the strategy, it doesn't cost a thing when you visit rsrlinks.com/DDD. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, 4 ways to turn your home equity into cash. Pick the wrong one, and it costs you. Selling a luxury house. Here's why now is a good time. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990. or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rates subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. 1990, the Mortgage Minute today being brought to you by rsrloans.com, rsrloans.com. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, shame on you. You get them for free. rsrlinks.com/calculators. rsrlinks.com/calculators. And let's take a look and see what the rates did on Friday. Mixed bag, conventional 30-year fix, 6.647. That was down. Jumbo 30-year fix, 6.74. That was up. FHA 30-year fix, 6.488. That was up. VA 30-year fix, 6.285. That was up. And the USDA 30-year fix. That's the rural areas. Generally no down payment. 6.479. That one was down. Want our thoughts about the market? rsrlinks.com/WUC. That is our weekly update. We put that out there every Friday, or generally every Friday. rsrlinks.com/WUC. Let's see what the markets are doing today. We've got the S&P 500 is now down about 19 points. Gold is up $28 an ounce. 10-year Treasury down 4 basis points, 4.65. And the mortgage bond is up 9 basis points. Bond up, rates down. Simply mathematics. You don't have to worry about any of it. It's just the straight math goes in right there. So what is it that's driving all this? That's why you turn to us. Well, oil prices and yields lower after the U.S. and Iran paused attacks over the weekend. WTI is down now about 7.7%, down almost $7 a barrel to $83.50 a barrel, while the 10-year yields are trading at 4.646, 4.65, we'll call it. Now that there is a pause in attacks, there are some reports of negotiations taking place through third-party intermediaries. The de-escalation, at least for now, is giving the markets a boost. Very important week ahead, highlighted by the Fed meeting. The Fed kicks off the meeting tomorrow. Their rate decision comes out Wednesday afternoon, 11 o'clock Pacific time. Market is pricing in a 34% chance of a 25 basis point hike. So leaving rates unchanged is what is expected, and that is what will happen. We believe that Warsh would like to leave rates unchanged the remainder of the year unless absolutely forced to hike. He does not like to overreact to price shocks like the oil disruption we are seeing, and has cover to be patient and wait to see what intel he gets from the 5 task forces he has deployed. Durable goods orders, which measures larger, often more expensive products meant to last 3 years or longer, was reported up 0.3% in June. This was weaker than the 2.5% expected, but does not tell the whole story, as this report can be heavily influenced by aircraft orders, non-defense orders, ex-air, which is core reading and gives a better picture, rose 0.9%. This was stronger than estimates of 0.8% and comes after May was revised up from 1.6 to 1.9%. Core shipments, which gets plugged into GDP, rose 1.9%, was a strong reading that will likely result in an upward revision to GDP, at least from that component. So this week, we've got the ADP weekly report and the Case-Shiller and FHFA appreciation reports on Tuesday. Wednesday, we've got the Fed meeting. So we're going to get their whatever they decide to do, which we think is nothing. And Chair Warsh will do his press conference afterwards. Thursday, personal consumption expenditures. That is the Fed's favorite measure of inflation. We'll also get Q2 GDP and jobless claims. That's the Mortgage Minute, brought to you by rsrloans.com, rsrloans.com. And we are still seeing a lot of folks talking about the idea of, and I had this conversation with a real great real estate agent on Friday about how, people trying to sell their houses and houses staying on the market longer. Well, how do you get them sold quicker? You have to follow our strategy, rsrsalesmax.com, rsrsalesmax.com. And one of the key strategies in there is the buy down program, rsrlinks.com/buy down. We explain it in depth right there, rsrlinks.com/buy down. Now, why do I mention that? Well, there's houses on the market right now. The houses are staying on the market right now. Now, when you go and look at the buy down program, well, basically what that's going to do is give you a strategy that's different than the other people in the marketplace as to how to get your home sold. And you have agents out there that think they're not allowed to talk about commission and setting a commission or using a commission to incentivize other agents. Hogwash. The only thing that new dumb legal opinion was, or ruling, was that you can't put it in the multiple listing service. Now, if you've got an agent that understands marketing and understands how to do their job other than to put something on the multiple listing, anybody with a pulse can put something in the multiple listings. You don't even have to be a real estate agent to do that. It's understanding how to get your house, getting a person's house sold is why you want an agent. Now, when you're doing these things, what are you going to do? You can still email everybody, every real estate agent in the area. You can still text every real estate agent in the area. They can still send a fax. I know there's not many fax machines out there anymore, but there's all kinds of marketing opportunities and avenues that a good agent can do. Now, the question is, and here's the big one, do you have a good agent? And the answer to that question is no. Why do I say you don't have a good agent? Because 70%, over 70% of licensed real estate agents did not sell a house in the last 12 months. 70%. So when I say that you don't have a good agent, the odds are in my favor. Right? 7 out of 10 of them don't know what they're doing because they didn't sell a house. Now, how do they survive? How do they feed their family? Well, what they do is they have a second job. So you're going to trust them with your largest asset, your largest liability, your house and your mortgage. And they can't even feed their family with what they're doing, and you're going to trust them with your family. I'm just telling you, give us a call at 800-306-1990. I've got a report card on all the licensees that are doing business. I got a report card on the licensees that aren't doing business. And we can show all of that to you. And it doesn't cost you a thing. Now, you want to sell your house? So we gave you the sales max, rsrlinks.com/salesmax. We've got a home seller's guide, rsrlinks.com/HSG. And if you want to really protect your family, have you claimed your house with your home report? rsrlinks.com/home report. Now, claim your real estate, claim your property, claim your residence. I don't care whether you own it or not. When you go to rsrlinks.com/home report, once a month, we're going to send you a report on the residence, on your residence. But more. Once a week, we're going to show you things to do in your area. And we're going to also send you all kinds of discounts for services in your area. Now, I'm sure you've probably heard of Groupon, right? Well, this is Groupon customized for your address. rsrlinks.com/home report. It's all there. It's all for you. It's all free. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, selling a luxury house? Here's why now is a good time. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Selling a luxury house? Here's why now is a good time. If you own a luxury house, you're in a stronger spot than most sellers right now. While much of the market has cooled, the high-end tier has not. Sales prices and buyer demand are both up. So if you're considering selling, now could be a great time to make your move. Let's start with prices. Before we get into it, what actually counts as a luxury home? Generally, these are homes in the top 5% price range for the area. So it varies depending on where you live. What's interesting is that according to the latest data from Redfin, sale prices for luxury houses have risen about 3 times faster than for non-luxury. Right now, the typical home sale price is up about 1.5% year over year. But high-end homes, their sale prices have gone up nearly 5% since last year. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you are seeing a chart of luxury prices rise 3 times faster than non-luxury prices. That's a bigger deal than it sounds like. Despite all the talk about slowing price growth lately, sale prices in this segment of the market may be rising faster than you expect based on the time and the headlines. That's going to be a good thing if you're thinking about selling, and rising sale prices are only half the story. While so many headlines are talking about how buyers are pulling back, that's not necessarily true when it comes to luxury homes. In fact, right now, it looks like the higher the price point, the more active the buyers. Lawrence Yoon, chief economist with the National Association of Realtors, NAR, explains, quote, The luxury market has really performed better compared to the lower price point. If we look at price points, any home priced under $250,000, virtually no change in unit sales from 1 year ago. Then you go into the upper price category, and home sales are up about 10% from 1 year ago. But the $1 million plus homes, it's up by 18% from a year ago, unquote. Remember, double those numbers for Southern California. Basically, more homes are selling on the upper end of the market. A big reason is that high-end buyers tend to feel less of the affordability pressure weighing on many households today, so they keep buying even when the wider market slows. That demand also means that luxury houses don't stay on the market as long as they used to. According to the most recent data from Redfin, for luxury homes, the median number of days on market is under 50. That's much faster than pre-pandemic norms, going even as far back as 2014. And again, we've got that chart, luxury homes still selling relatively quicker. That means you probably won't spend a ton of time sitting in limbo wondering when you'll get an offer. Remember, you've got rsrlinks.com/HSG, rsrlinks.com/HSG to figure out about selling the property. And also put out there some financing strategies. If you're a seller, the most part, people are not buying houses for cash. So put a comment, tell your agent to put a comment in the listing. Seller has approved special financing terms with their preferred lender. That's the buy down program, rsrlinks.com/buy down. And on the luxury market especially, take a look at all the non-traditional lending options. There are a boatload of them, and they're not priced that much higher than a traditional loan. Bottom line, selling a high-end house is a big decision, and you deserve to feel confident going in. With sale prices climbing and buyers active at the top, this is a strong window to make your move. Ready to cash in? Let's talk strategy. Just give me a call, 800-306-1990, 800-306-1990. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, 4 ways to tune your home and equity into cash. Pick the wrong one, and it costs you. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage 101 brought to you by rsrloans.com, rsrloans.com. Let me ask you something. If your house is worth $200,000 more than you owe on it, how much of that $200,000 can you actually spend today? If you answer is none of it, you're not alone and you're not wrong. That money is real, but is locked behind a wall. And this segment is about the 4 keys that can open that wall. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Here's the thing nobody tells you about home equity. It is not a bank account. It is not cash sitting somewhere with your name on it. It is a number on paper, the gap between what your home would sell for and what you still owe. For most families, it is the single biggest pile of wealth they'll ever build, bigger than their retirement account, bigger than their savings, and most of them never touch it because they do not know how or because someone talked them into the wrong tool for their situation. So let us talk about the tools. There are 4 ways to turn that trapped equity into cash you can actually use, and they are nothing alike. The first is a classic home equity loan, sometimes called a second mortgage. You get one lump sum of cash at closing, one fixed rate, one payment that never changes for the life of the loan. I had a couple redoing their kitchen, and they loved this option because they knew the exact number they needed. They had steady income. They wanted a payment they could set and forget. If that sounds like you, a home equity loan is hard to beat. The second is a HELOC, a home equity line of credit. Think of it like a credit card where your house is the collateral. You get a credit limit. You draw what you need. You pay interest only on what you have actually used, and the credit becomes available again as you repay it. This is a tool for the phased renovation, a multi-year tuition bill, the business owner who needs flexible working capital. The trade-off is the rate usually moves, so your payment can rise over time. And here's something that used to be a real drawback that just is not true anymore. Modern platforms can now fund a HELOC in as few as 3 to 4 days. Speed is no longer the excuse to put this off. Now, here is a version of a HELOC that most homeowners have never heard of, and it might be the most important thing I say today. It's called a first lien HELOC. Some people call it a wealth builder loan. Instead of sitting behind your mortgage, it replaces your mortgage entirely and it calculates interest differently. Instead of charging you interest on the whole balance, it charges interest on your daily average balance. So when you run your paycheck and your savings through that account, you're mechanically paying it down every single month. Even when you keep full access to that money as a line of credit. Homeowners using this strategy are paying off their homes in 6 to 8 years, not 30, without giving up a dime of liquidity. I want to be clear about something here. How you use a loan matters more than the rate on it. A slightly higher rate on a smart structure will beat a low rate on a lazy one every time. The third tool is completely different because it is not a loan at all. It is called an equity share, sometimes called a home equity investment. You're not borrowing anything. You are selling a slice of your home's future value to an investor in exchange for cash today, with no monthly payment and no interest accruing. For a retiree on fixed income or someone who has been turned away by traditional lenders, that absence of a monthly bill is often the entire reason they look at this option. But understand what you are giving up. If your home appreciates fast, the investor's slice of that appreciation can be significant. This tool trades a payment you do not want for a piece of upside you might miss later. Now, if you're doing this short term, there are safeguards in there as well. And the fourth tool is built specifically for real estate investors. It's called a DSCR second, and it qualifies you in a way almost no other loan does. Instead of looking at your personal income, your W-2s, your tax returns, the lender looks at the rental property itself. Does the rent cover the payment? If the property cash flows, you qualified, period. For an investor who owns a stabilized rental and wants to pull cash out to buy another property without disturbing a great rate on their first mortgage, this is often the cleanest path there is. So which one is right for you? Here's the single most valuable habit I can hand you today. There is a difference between eligibility and suitability, and it is the difference between a product you can get and a product you should get. Eligibility is the lender's checklist, your credit score, your loan to value, your income. Suitability is your checklist, your goals, your timeline, your tolerance for a monthly payment. You can be eligible for all 4 of these tools and still be suitable for only one of them. Run both checklists before you sign anything. And when you're running those numbers, score every option through 3 lenses. Safety, how protected is your home once the deal closes? Liquidity, how easily can you get your money or get out of the deal? Return, what do you actually walk away with? A home equity loan scores high on safety, low on liquidity. A HELOC scores high on liquidity with some rate risk. An equity share trades your monthly payment for a slice of your upside. The lowest advertised rate rarely wins on all 3 of these lenses at once. And that is exactly why the cheapest option today is rarely the cheapest option over 10 or 20 years. If you have equity sitting in your walls and you are not sure which of these 4 doors is the right one to walk through, that is exactly the conversation I have with families every week. Go to rsrlinks.com/second loan, rsrlinks.com/second loan, and let us run your numbers together before you sign anything. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrloans.com. That's rsrloans.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.